Now, a special market report on how agricultural price fluctuations this year have affected the American farmer, especially here in Mississippi. I spoke with MSU Extension economists Drs. Will and Josh Maples to get their thoughts on how things look and how we got here.
Yes, so this year, as we've talked a lot about throughout the summer, is row crop prices are coming down. We're coming off those 2-year highs we had just a couple years ago, coming out of COVID, and overall producers are their profit margins are getting squeezed tight. Going into next year, kind of given the current market outlook and what we're seeing with input costs to grow a crop, it's going to be a lot tighter to maybe negative profit margins on a lot of our major row crops, just kind of given these current market conditions.
We've been seeing throughout the entire year that many of these major row crops, the prices keep going down, and they'll rebound here and there, but they're generally on the downside, especially in corn and soybeans. Is that still carrying over?
Yes, so it's just kind of the supply and demand situation we found ourselves in is, we've have a third record corn crop coming in that's following up a record corn crop from last year that's been sitting in a lot of bins. We've got a record soybean crop coming in this harvest. There's a lot of supply of grain out there, and we're seeing that struggle on the demand side. So just, our basic supply and demand economics they're out of balance right now. We got a lot of supply, weak demand. That's just keeping the lid on these prices currently.
So how's that affecting the farmer themselves out in the field actually making these crops happen?
So, it's just, they're price takers. They take the price that the market gives them. They can't really determine what price they get. Going into next year, we've seen inputs to actually grow the crop come down a little bit, but they're still facing high input cost. So how it's affecting them is it is really starting to squeeze them from a profit standpoint. This next year, it's going to be tight when it comes to their profit margin.
And all of the farmers or producers that you've talked to, were they able to lock in a good price before the bottom fell out?
It just depends. I've talked to some producers who have a really good marketing plan in place, and they took advantage and they booked corn a year ago whenever they still had $5 plus corn. But I've also talked to some producers that didn't do any type of marketing beforehand, and they're stuck selling corn at $4 this harvest. So it's kind of all across the board. It just depends on what kind of marketing each producer did beforehand. They had some opportunities, but it was a year plus out from this harvest that they had to make those decisions, and a lot of producers are hesitant to market anything that soon.
So on the cattle side, the biggest cattle story this entire year has been the slow recovery of the herd since the big cull that happened, 2 years ago now? How has the recovery of the herd and cattle prices been affecting the producers so far this year?
Yeah, so it's really a tale of two different things going on. You've got the supply side, like you're talking about, where we've got tighter supplies. And so for many producers, they're running fewer numbers of cattle than they've been running for quite some time. We've had a lot of producers that have liquidated. They've either sold out their entire herds or they've reduced their numbers. The flip side of that is for people with cattle right now, the prices are really strong. So the profit margins are the best that they've been since probably 2014, 2015. So for folks who have cattle to sell right now, it is a really good time to have cattle and to be in the cattle business. Now, it is difficult to try to expand or to try to get into the cattle industry with these higher prices. So you may have folks that want to get in, but with the much higher interest rates that we're seeing right now compared to where we were in 2014, 2015, the last time we kind of went through this higher price period, it's more difficult for somebody to go out and buy cattle right now, especially if they need to borrow the money to do so. So on the recovery side, I don't think we're recovering in terms of supplies yet. I don't think we are expanding the herd here in Mississippi or nationwide yet. There's no indications that I'm seeing in the data that would tell me that we should expect more cattle next year than we have this year. When this year is going to be the 5th or 6th consecutive year of decline in beef cattle numbers, which is tighter supplies, but also really supportive on the price side. So, my kind of view on this right now is until we start seeing seeing an expansion in supplies, we should be in a pretty strong price environment.
Yeah, that's an interesting idea that some people may, and me included, may not even think about, and that's although the price of cattle is high, that means you sell cattle at a high price, if you want to buy cattle, that means you're also having to buy it at a high price. And that's something that I certainly didn't think about until you just brought it up there. It makes total sense why a lot of these cattle producers would be in bind, because they want to expand the herds, but they're paying out the pocket to do so.
Exactly, and it even goes a step further. I mean, it's not just if you're buying new cattle, so think about you want to buy some heifers to be able to produce calves next year. Then you're actually having to see that price that you would pay. But the exact same thing is true for people who are producing heifers. They may have heifers and steers right now, and they're deciding, hey, do I sell these heifers to become feeder cattle to ultimately go into the beef supply, or do I hold them back and try to develop them and get a calf from this heifer next year? Well, selling that heifer is a pretty good price right now, and so you're trying to weigh those two pieces between selling it, retaining it, developing it, and right now it seems like not most, but we're seeing a lot of people that are going ahead and making that sell decision. That's partially because of what's happening right now. I do think there's still some going on in the back of people's heads about what happened in 2014, 2015. 2014, we saw really strong prices. People expanded rapidly, and then prices dropped on them within a year. And so this time around, I think people remember that, and they're worried this time, this rally in prices is going to be like that rally. And so we're not seeing near the rapid expansion that we saw in 2015, 2016.
So the ag market story this year, row crop prices falling, leaving many producers wondering how they'll make ends meet with increasing input costs, while cattle prices still on the high end, giving opportunity for those looking to sell cattle, but hindering those looking to buy.